as consumer confidence just surprised economists. And markets are paying attention. After months of mixed economic signals, Americans are suddenly feeling more optimistic about jobs, wages, and spending. But is this the beginning of a stronger economics cycle? Or just a temporary bounce? Let's break it down. Consumer confidence measures how optimistic Americans feel about the economy. It reflects how secure people feel in their jobs, how comfortable they are spending money, and whether they expect conditions to improve. When confidence rises, spending usually follows. And since consumer spending makes up nearly 70% of the US economy, this number matters more than most people realize. Several factors are driving this recent surge. First, job growth remains steady. Unemployment levels are historically low. Second, wage growth has improved in key sectors. Third, inflation has cooled compared to previous peaks. Together, these signals are making households feel more stable. But stability doesn't always equal long-term growth. When consumers feel confident, they spend more. Retailers see higher sales. Travel demand increases. Big-ticket purchases like cars and appliances rise. For Wall Street, this often signals stronger corporate earnings ahead. Stocks tied to retail, banking, and consumer goods may benefit. But markets can also react too quickly. Investors must ask, is this sustainable or seasonal? There are still headwinds. Interest rates remain elevated. Mortgage rates are limiting housing activity. And global economic uncertainty continues. If inflation resurges, confidence could fall just as quickly as it rose. This is why economists remain cautious. Short-term optimism does not guarantee long-term expansion. Over the coming months, key indicators will matter. Retail sales data, wage growth reports, Federal Reserve policy decisions. If spending holds steady and inflation stays controlled, this confidence surge could mark the beginning of broader economic momentum. If not, a markets may correct. Consumer confidence is more than just a survey. It's a psychological engine behind the US economy. Right now, that engine is revving higher. The question is, will it keep accelerating or stall under pressure? Investors, businesses, and households are all watching closely. Consumer confidence is more than just a monthly number. It reflects how Americans truly feel about their financial future. When households feel secure, they spend. And when spending rises, the economy gains momentum. But confidence can shift quickly. Rising interest rates, inflation pressures, or global uncertainty could change the outlook. The next few months will be critical. Retail sales data, wage growth, and Federal Reserve policy decisions will tell us whether this surge has staying power. For investors and businesses, this isn't just sentiment. It's a signal that could shape markets, spending trends, and economic momentum in 2026. We'll continue tracking every major development. Subscribe and stay informed.